Hello friends, hello professionals, and welcome back to my channel, The Sea of Regulation. Now this video is a bit of a part 2 to another video that I've just done, and it's in relation to suspicious activity reports and suspicious transaction reports. Why are they important? Why do people need to file them? And what you need to know in relation to this particular requirement under anti-money laundering and counter-terrorist financing laws, even if you're not in financial services. But before I jump into this video, let me get my usual disclaimers out of the way. I am a financial services regulator. I am not a lawyer and I'm not a professional advisor. And the views on this channel are definitely all my own. They do not represent the views of any regulatory authority or international standard setter. Now with that out of the way, let's dive in. So suspicious transaction reports and suspicious activity reports. Now, they sound like, something that's another form to be filled out. And technically, they are. But what happens is that there's a requirement for firms, regulated institutions, regulated persons to file suspicious transaction reports and suspicious activity reports when there is a suspicion of money laundering, terrorist financing, or other financial crime, such as fraud, extortion, human trafficking. There are a lot of other crimes that happen. And it's not just the core issue of money laundering, because you have something called predicate offenses. Predicate offenses, definitely drop it in the definition below. But basically, crimes that are committed that there may be some financial gain from, and the proceeds of that criminal activity needs to be laundered into the system. Or, in the case of terrorist financing, you can have funds being diverted to terrorist organizations that came from legitimate sources. So again, this is why you would need to have regard for why you're filing a suspicious transaction report. You want to stop the criminals from actually gaining from the proceeds of their monies, and you want to stop terrorist organizations from profiting from certain activities and carrying out terrorist acts in different countries. Now, let's drill down a bit into what these reports are. You work in a firm, you work in a jewelry store, you're at a casino, you work there, you see something that's suspicious. You're supposed to report that suspicion to your money laundering reporting officer. If you have any questions about that, I'll put the link to that video in the description below. Now, the suspicion could be something that you've seen, something that doesn't look right. It may be that you don't have full evidence that this is something wrong. And that is exactly what it's geared at, suspicions. What you will do is report this to your mlro, and they will then investigate that suspicion. Now, every organization may have a different approach in terms of what to report on the suspicion. But at a certain minimum, there's some information points that need to be captured. So for example, what date? Who was involved? Where did it happen? What did it affect or impact? Why do you feel that there's a suspicion? There are certain minimum data points, again, that will be captured in different organizations dependent on what they do. And the money laundering reporting officer will then go and investigate it. Now, an activity may be something that doesn't involve an actual customer. It could be someone who is looking at being a customer and they've made an inquiry to your firm, and based on that inquiry alone, you have their name, you have maybe an email address or a phone number, and they've asked you, will you help me hide money from my wife who I'm getting a divorce from? That's a bit suspicious. Why are you trying to hide money from your wife? And I understand you're getting a divorce, but in some jurisdictions that can have its own consequences. Or I'm trying to not pay any taxes in this jurisdiction and I need help with this money and putting it in a different location so that the authorities can't get it. Tax crimes are a predicate offense, and so that is something suspicious as well. These are things that you should probably report. Well, not probably, you should report them. But beyond just the suspicious activity, why do you think it's important to report them? Well, if they've asked you, chances are they might try to ask or infiltrate some other organization to perpetrate their financial crime, to launder money, to hide money, to fund terrorist activities. And so there's some persons in financial services who see this as a burden, and I really don't get it. If you're a single female living alone and you see a suspicious man that you've never seen before lurking outside your home, you're going to call the police. That's filing a suspicious activity report. There's suspicious activity happening around where you live that you feel threatened by. But the difference in a financial services firm or an NPO or other DNFBP is that the suspicion can hurt the financial services industry. So it's basically the same thing. Instead of calling the police, you report this to your mlro and they will take it from there. Now, as it relates to suspicious transactions, I will say this to you. In my engagement over the years, a lot of people feel that the transactions are always involving money. Transactions don't mean money. Transactions are just that, things that happen between two organizations to transact a particular business. So for example, you have a long-time client. They've asked for this one widget every single year, and the widget is something that is required for them to file to their bank in their jurisdiction to validate that I have this particular business, or for contracts that they may be entering into with certain clients. You want to make sure that things are legal and things are above board. But then that same client, instead of requesting one widget, requests 7. That's a transaction. Not the money that is being paid for the 7 widgets versus 1, but the fact that they are now asking for 7 of these things and not 1. And in the case of the widgets, let's replace widgets with certificates of good standing or certificates of incorporation. If they requested 1 per year, that's a normal transaction because a bank may need to validate that to show that they have an active company. Or even in the jurisdiction that you're in, I could have a company, I could have a trade license, and the trade authority needs that certificate of good standing and other collateral documents to show that the company is still in good standing. But if I request 7 of them, what does that mean? What am I going to do with it? It's a bit suspicious. Maybe she's opening some bank accounts in another jurisdiction. These are things that should raise questions in your mind, and often we look to suspicious transactions as being cash-based only. But I can tell you right now, there are a lot of ways that people get really clever to launder money. Now, I'm not going to get into how people launder money because that's not the purpose of this channel, but more towards making sure that your anti-money laundering regime, your counter-terrorist financing regime is really robust so that you can actually detect them and do the right thing. Now, one of the other things that I've noticed from my time as a regulator and engaging with some of the financial intelligence units is that a number of firms tend to file their STRs and SARs after a problem emerges. So you wake up one morning and you realize that your client is on the front page of the New York Times, or the Associated Press has blown up all of the internet with a particular fraudster or embezzler or criminal, drug dealer, mafia, and you realize that this is the person that is your client. And the first thing you do, you rush into work and you tell the mlro, you need to file an STR, and they dutifully file it. What good is it then? You see, the SARs and the STRs that are filed to the Financial Intelligence Unit aid in investigations that they're carrying out to make sure that they can thwart the criminals from their activities. Filing what is termed as a defensive STR doesn't always help. So this is why you need to make sure that your internal controls and your staff and the staff training is really effective at identifying what the issues are and for them to feel empowered to file the SARs and the STRs as they should. Now, there's a lot I can say in relation to this particular space, but I'll leave some helpful information in the description below. And if you found this video helpful, definitely give it a thumbs up. Do the YouTube thing, hit the notification bell so that when I drop my videos, you'll be the first to know. And of course, share it with some friends. Sharing is caring. And I would definitely love for you to share this with your friends because they may be in a better position to stop someone from perpetrating a financial crime. And guys, I'm going to end it here and I'll see you in my next video.